If you have come across headlines claiming a $2,400 Social Security deposit is on the way, you are far from alone. For countless seniors, that figure immediately raises a host of questions. Is this some kind of bonus payment? Is a new government program being launched? Or is this something you might miss out on if you do not act quickly? Let us clarify the reality. The $2,400 amount is indeed based on real figures, but it is neither a universal payment nor a random occurrence. This sum does not mean that every person receiving Social Security will find $2,400 in their account on the same day, or ever. Instead, it reflects the various ways Social Security benefits are calculated, scheduled, and occasionally combined under specific circumstances. For some retirees, a $2,400 deposit can appear due to a monthly benefit that is higher than average, a cost of living adjustment already factored into their payment, a lump sum of back pay correcting a past underpayment, or the close timing of Social Security and Supplemental Security income benefits arriving together. For others, that number may never show up, and that does not indicate anything is wrong with their account. What makes this situation particularly confusing is the element of timing. The Social Security Administration does not disperse payments to everyone on the same day. Instead, payments are scheduled based on your birth date, the type of benefit you receive, and when you first began receiving benefits. This means two individuals who are both fully eligible can receive very different amounts on completely different days. In this discussion, we will break this down clearly. We will explain who actually sees deposits near $2,400, how the payment schedule truly functions, why some checks appear unusually large, and what rules you must understand to avoid confusion or unmet expectations. With Social Security, the biggest mistakes often stem from assuming that every headline applies to everyone. To understand why some people are seeing deposits close to $2,400 while others are not, you first need to grasp one fundamental concept. Social Security does not pay everyone on the same day. The Social Security Administration follows a structured payment schedule that has been in place for decades. Payments are released based on when you started receiving benefits and your date of birth, not on your income level, financial need, or urgency. Here is how it works. If you began receiving Social Security before May 1997, you are part of a legacy group. Your payment is issued on the 3rd of every month, regardless of your birthday. If you started receiving benefits after May 1997, your payment is issued on a Wednesday, and that Wednesday is determined by your birth date. Those born between the 1st and the 10th receive their payment on the 2nd Wednesday of the month. Those born between the 11th and the 20th receive theirs on the 3rd Wednesday. Those born between the 21st and the 31st receive theirs on the 4th Wednesday. This schedule alone explains why people often talk past each other when discussing deposits. One person checks their account early in the month and sees a large deposit, while another checks later and sees a smaller one. Both situations are completely normal. Now add one more layer. If you receive both Social Security and SSI, those payments follow different schedules and sometimes arrive close together or even on the same day. When that happens, the total deposit can look unusually large. This is how figures like $2,400 suddenly appear. Not because of a bonus, not because of a new program, but because the timing caused multiple payments to overlap. Understanding the schedule helps prevent panic and false expectations before they even have a chance to start. Now, let us address the number itself. $2,400. This amount sounds high to many people because it sits above the average Social Security benefit, and that is true. The average monthly retirement benefit is significantly lower than $2,400. But above average does not mean abnormal. In fact, there are several completely legitimate reasons why a Social Security deposit can reach or exceed this level. First, benefit amounts are based on your lifetime earnings. If you worked for many years with steady or above average income, paid into Social Security consistently, and especially if you delayed claiming your benefits, your monthly check can naturally fall into the $2,400 range. Second, the age at which you claim benefits matters. Someone who claims benefits at full retirement age or delays until age 70 receives a permanently higher base benefit. When cost of living adjustments are applied on top of that higher base, the monthly amount grows faster over time. Third, adjustments and corrections occur. The Social Security Administration occasionally corrects past underpayments. When that happens, the correction may be issued as back pay, often combined with your regular monthly check. That single deposit can look unusually large, even though it represents money you were already owed. Finally, combined benefits can create confusion. If Social Security and SSI payments arrive close together or within the same deposit window, the total can approach numbers like $2,400 without any special approval or new program. The key takeaway is this: a $2,400 deposit does not automatically mean a new stimulus, a special bonus, or a mistake. In many cases, it simply reflects how Social Security rules interact, sometimes all at once. Understanding that prevents unnecessary worry and helps you focus on what really matters, knowing why your number looks the way it does. One of the most common reasons a Social Security deposit suddenly looks much larger than usual is the combination of cost of living adjustments and back pay. Let us break that down clearly. A cost of living adjustment, or COLA, is applied automatically when Social Security benefits are updated to reflect inflation. That increase becomes part of your regular monthly benefit going forward. But sometimes the timing is not perfect. If the SSA identifies that your COLA was applied late or calculated incorrectly, they do not spread the correction out over months. Instead, they issue a lump sum back payment to make you whole. That back pay is often deposited together with your regular monthly benefit. When that happens, the total deposit can look unusually high, sometimes reaching figures like $2,400 or more, even though your normal monthly benefit is lower. This catches many people off guard. There is usually no warning letter ahead of time. The deposit just appears. And because the description often looks similar to a normal payment, recipients may assume it is a new benefit or a special program. It is not. It is simply money you were already entitled to, delivered all at once. This same situation can occur when earnings records are corrected, benefit calculations are adjusted, or delayed approvals are finalized. In each case, the SSA uses back pay to correct the difference. The key thing to remember is this: a larger deposit does not automatically repeat the next month. Once the correction is paid, your benefit typically returns to its normal level, plus any permanent COLA increase. Understanding this prevents confusion, panic, and unrealistic expectations. With Social Security, a large deposit often reflects timing, not a permanent change. Another major reason some people see Social Security deposits near $2,400 has nothing to do with COLA or back pay. It has to do with receiving more than one benefit. Many seniors and disabled individuals receive both Social Security and Supplemental Security Income, commonly known as SSI. While these programs are administered by the same agency, they follow different payment schedules, and that difference can create confusion. Social Security retirement or disability benefits are paid monthly based on the schedule we discussed earlier, by birth date or the third of the month for legacy recipients. SSI, however, is typically paid on the first of the month. When the first falls on a weekend or holiday, the payment is moved up to the prior business day. Here is where things overlap. In some months, the SSI payment and the Social Security payment arrive very close together, sometimes within days and occasionally on the same day, depending on bank processing. When that happens, the total amount deposited can look unusually large. For example, a Social Security benefit of around $1,500 plus an SSI payment of around $900 together approach the $2,400 range without any new approval, bonus, or special program. This leads many people to ask whether they received extra money or if this is a new payment. In most cases, the answer is no. It is simply two separate benefits arriving at the same time. The important thing to remember is this: just because two payments arrive together once does not mean they will always arrive together. The schedule can shift again the following month. Understanding this helps prevent unnecessary worry and prevents people from planning around money that will not repeat. Seeing a $2,400 Social Security deposit hit your account can feel like a financial relief. But before assuming that entire amount is free to spend, there is an important reality to understand. Not all of it may truly be yours to keep. Social Security benefits can be partially taxable depending on your overall income, and that tax liability does not always show up immediately. The IRS determines taxation using something called combined income, which includes your adjusted gross income, any tax-exempt interest, and a portion of your Social Security benefits. If your combined income crosses certain thresholds, up to 85% of your Social Security benefits can be subject to federal income tax. Here is why this matters with a larger deposit. If the $2,400 includes back pay, combined payments, or a correction issued in a single month, it can temporarily raise your annual income. That may increase how much of your Social Security becomes taxable, push you into higher tax withholding, or create a surprise bill at tax time. Some beneficiaries choose to have federal taxes withheld automatically from their Social Security checks. Others do not and only feel the impact months later. This is why a large deposit should always trigger a pause, not panic. Before spending it, it is wise to consider whether part of that money may be owed back in taxes later. In some cases, setting aside a portion can prevent unpleasant surprises when filing your return. The key takeaway is simple. A $2,400 deposit does not always equal $2,400 in usable income. Understanding the tax side helps ensure that a short-term boost does not turn into a long-term problem. Even when a Social Security deposit reaches $2,400, that number does not always reflect what stays in your account long-term. One of the biggest reasons is Medicare premiums, especially something called IRMAA AA. Most seniors are enrolled in Medicare Part B, and the monthly premium is automatically deducted from Social Security before the money ever reaches you. There is no separate bill. The deduction happens quietly. For many people, the standard Part B premium already takes a noticeable bite out of their benefit. But for higher income beneficiaries, there is an additional layer. IRMAA, short for Income-Related Monthly Adjustment Amount, raises Medicare premiums for individuals and couples whose income exceeds certain thresholds. These thresholds are based on tax returns from 2 years earlier, not current income. That timing catches many people off guard. A large Social Security deposit, especially one that includes back pay or combined payments, can push income higher for the year. That increase may not affect premiums immediately, but it can trigger higher Medicare deductions later, sometimes without clear warning. The result is that your deposit looks strong now, but future checks quietly shrink. This is why some retirees feel like money is being taken away months after they receive it. It is not a penalty, and it is not a mistake. It is simply how Medicare premiums adjust based on income history. The important thing to understand is this. A large Social Security deposit can have delayed consequences. Knowing how Medicare and IRMAA work helps you anticipate changes instead of being surprised by them. That awareness is critical when planning around a one-time deposit like $2,400. Another reason some people see unexpected changes in their Social Security deposits, sometimes right after receiving a larger amount like $2,400, has to do with working while collecting benefits. This issue mainly affects people who are under full retirement age. Here's the rule many people forget. If you receive Social Security before reaching full retirement age and you continue to work, the SSA applies an annual earnings limit. When your wages or self-employment income exceed that limit, the SSA withholds part of your benefits. For every $2 earned above the limit, $1 in benefits is temporarily withheld. This often causes confusion and anxiety. Someone receives a large deposit one month, then notices their next check is smaller or missing entirely. The immediate assumption is that something went wrong. In most cases, nothing did. The SSA tracks earnings throughout the year. If your income goes above the limit, they adjust payments to account for it. That adjustment can show up suddenly without much warning. Here is the key point many people do not realize. That money is not lost forever. Once you reach full retirement age, the earnings limit disappears completely. At that point, the SSA recalculates your benefit and credits you for the months when payments were withheld. Your monthly benefit increases going forward to make up for what was held back. So a temporary reduction now can mean a permanent increase later. Understanding this rule helps explain why deposits can fluctuate even in the same year, and why a big payment like $2,400 does not always mean smooth, identical checks every month. Another important reason a Social Security deposit can suddenly jump, sometimes reaching amounts like $2,400, is earnings record corrections. This happens more often than many people realize. Your Social Security benefit is calculated using your lifetime earnings record, which is built from decades of reported wages. Employers report those wages to the government, and the SSA uses that data to calculate your benefit. But errors happen. Sometimes income is reported late, sometimes it is reported incorrectly, and sometimes it is missing altogether. When the SSA later discovers an error, or when a beneficiary notices it and requests a correction, the agency recalculates the benefit. If that recalculation shows you were underpaid in the past, the SSA issues back pay to make up the difference. That back pay is often issued as a lump sum deposit combined with a regular monthly benefit. This is another way deposits can suddenly appear much larger than normal. The important thing to understand is this: that money is not a bonus, and it is not extra assistance. It is money you already earned and were always entitled to, but did not receive on time. Many beneficiaries do not realize they have the right to review their earnings history. Checking your Social Security statement periodically can help catch mistakes early before they compound over time. When corrections are made years later, the back pay can be substantial, sometimes thousands of dollars delivered all at once. That is why some deposits look surprising. They are not new money. They are late money. Understanding this helps explain why large one-time deposits happen and why they usually do not repeat the following month. Another reason some Social Security deposits reach amounts like $2,400 involves rules that many people never fully learn. These are the survivor benefit and switching rules. When a spouse passes away, the surviving spouse may be eligible to receive up to 100% of the deceased spouse's Social Security benefit, depending on age and circumstances. This is known as a survivor benefit. For many widows and widowers, this benefit is higher than their own retirement benefit. Here is where it gets important. Social Security allows certain beneficiaries to switch benefits strategically. A surviving spouse might initially receive a survivor benefit and later switch to their own retirement benefit, or do the opposite if it results in a higher payment. When that switch happens, the change can cause a noticeable jump in the monthly deposit. In some cases, the switch is processed retroactively. When that occurs, the SSA may issue back pay covering the months when the higher benefit should have applied. That back pay is often delivered in a lump sum. That is another way deposits suddenly reach levels like $2,400 or more. Many people miss this opportunity simply because they do not know it exists. The SSA does not always proactively explain switching strategies, especially if no one asks. This does not mean everyone qualifies, but for those who do, the impact can be significant. The key takeaway is this: a higher Social Security deposit is not always about COLA or income. Sometimes it is about using the right benefit at the right time under rules that are already on the books, and understanding those rules can make a permanent difference in what you receive. Even when a Social Security deposit reaches $2,400, that number is often not the final amount you truly keep. One of the most important reasons is Medicare deductions. For the vast majority of seniors, Medicare Part B premiums are automatically deducted from Social Security before the money ever reaches your bank account. You do not receive a bill and you do not approve the transaction. The deduction simply happens. That is why many retirees focus only on the net deposit, not the gross benefit amount. In standard cases, the Part B premium alone can remove hundreds of dollars per month from a Social Security check. For higher income beneficiaries, the deduction can be significantly larger. This is where confusion sets in. A retiree hears about a $2,400 payment. They expect that full amount, but what arrives is noticeably less. That does not mean the SSA reduced your benefit, and it does not mean money is missing. It means Medicare was paid first. Medicare deductions do not stop at Part B. If your income exceeds certain thresholds, IRMA surcharges can increase both Part B and Part D premiums. These adjustments are based on tax returns from 2 years prior, not your current situation. That timing can be frustrating. You may feel financially tighter now, yet still pay higher Medicare premiums because of income from years ago, such as a retirement account withdrawal or property sale. The key takeaway is this: the Social Security deposit you see is the result of multiple systems interacting. Medicare always gets paid before you do. Understanding that helps explain why a headline number and a bank deposit are rarely the same and why planning around the net amount is essential. When it comes to Social Security deposits, especially larger amounts like $2,400, how you receive the money matters almost as much as how much you receive. The payment method can affect timing, reliability, and even whether issues are caught quickly. The Social Security Administration strongly encourages direct deposit or the Direct Express debit card. These methods are faster, more secure, and less likely to be delayed by mail issues or holidays. Paper checks still exist, but they are slower, more likely to be delayed, and more vulnerable to loss or theft. That is why many payment problems are reported by people still receiving checks by mail. Now let us talk about delays. If a payment does not arrive on the expected date, the SSA generally advises waiting 3 business days before reporting it. Banks sometimes process deposits later in the day, and holidays can push timing back slightly. However, if the deposit still does not appear, action matters. Checking your online Social Security account is often the fastest first step. It shows payment status, amounts, and explanations that may not be obvious from a bank statement alone. If something truly looks wrong, such as a missing payment, an unexpected reduction, or a deposit far smaller than expected, you have the right to contact the SSA and request a review. Appeals typically must be filed within 60 days, so waiting too long can limit your options. The key point is this: most payment issues are not permanent, but ignoring them can make them harder to fix. Awareness, documentation, and timely follow-up are what protect your benefits when something does not look right. Whenever headlines mention a number like $2,400 tied to Social Security, confusion spreads fast. And where confusion exists, myths and scams quickly follow. One of the most common myths is that a $2,400 deposit means a new stimulus, bonus, or special government program. That is simply not true.
Yeah, grind mode on, can't kill my drive. Turn the pressure up, I come alive. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. Wake up with a vision, I'm locked on the target. Turn pain into fuel, I'm a flame, I spark it. No shortcuts here, I embrace every test. Pressure on my shoulders, still I handle it best. I was made for the climb, every loss, every scar. Built me in the steel, now I shine like a star. If the road gets rough, I just double my speed. Ambition on 10, I was born to lead. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. They said limits exist, but I shattered the frame. Every wall in my path is just fuel for the flame. Discipline heavy, but my spirit is free. I don't chase success, success chases me. I'm the storm and the calm, I'm the rise, I'm the proof. Every bar that I drop is the grind in the booth. Blood, sweat, tears, that's the code I trust. I don't wait for the crown, I earn it, I'm rust.